Ever pondered if it would be better to purchase Tesla shares before or after the split? While some individual investors have been eager to purchase EV business stocks before to the split, many others have been anticipating it. Continue to watch and stay tuned to learn why. While many have been waiting for the Tesla stock to split 3-for-1, some are attempting to purchase the shares prior to the split. Without a doubt, one of the most popular stocks on the market right now is Tesla. Naturally, some people still believe that the stock of the company is too expensive. See why you ought to purchase Tesla stock now, ahead of the 3-for-1 split in today's video. A 3-for-1 stock split was proposed, and Tesla shareholders voted on it at the most recent shareholders meeting. The proposal was passed with a large majority of over 815 million shares voting in favor and just 9 million shares voting against. By the vote, Tesla's authorized common shares have increased to 6 billion from 2 billion. According to Tesla, as of March 6, 2024, the company had slightly more than 1 billion common shares outstanding. Following that, the EV firm declared that it will proceed with its 3-for-1 stock split and that the stock dividend would be paid on August 24. The stock split for all stockholders of record on August 17th will occur on August 24th, according to a press release from Tesla's board. In an effort to increase employee and investor access to equity ownership, Tesla stated in a press release that the board of directors had approved and declared a 3-for-1 split of the company's common stock. A dividend of 2 extra shares of common stock for each share owned as of August 17, 2022, will be paid to all stockholders who were on file on that date. The dividend will be dispersed following the conclusion of business on August 24, 2024. On August 25, 2022, trading will start on a stock split adjusted basis. The crucial query now is it better to purchase the shares before or after the split? Naturally, it's hard to predict what will happen to Tesla shares right before or right after the split. But it's safe to argue that much of the split's impact has been factored into the current trading price since it was disclosed. Put another way, astute investors are basing their acquisitions and disposals of Tesla shares on the split. It might be a smart idea to purchase before or during the split, as some analysts believe that the price of Tesla shares would surge after the split. For the company's shares, some quite high price projections have been made. Naturally, this does not imply that the forecasts are correct, particularly given that the market is currently trading between $800 and $900, with valuations hovering around $1,000. However, there's a chance that things will improve a little bit following the split, which could lead to a high stock price. Even if Tesla's growth trajectory continues on an upward trajectory, most analysts believe that the firm has a bright future ahead of it. It is improbable, though, that the corporation will grow to the extent that it has in the last 2 to 3 years. Most businesses, especially those in the technology industry, fit this description. They grow quickly initially, but as more competitors enter the market, their growth slows down. However, slower growth is still growth, and analysts generally concur that Tesla is still in a strong position to develop in the long run. But there may be some hiccups along the road for investors. To put it simply, a stock split occurs when a firm divides an existing share into several new shares, if the company's past is any guide. A company's share price will be halved, but the number of outstanding shares will double if it splits 2-for-1. Stock splits are typically implemented by companies after a significant increase in share price. The stock will become more affordable as a result of the split, drawing in a larger pool of investors. Investors who had been unable to purchase a stake may suddenly find themselves enticed. However, a split has no effect whatsoever on the company's present worth. After a stock split, investors' holdings will still have the same monetary worth. They will only possess additional shares. The same concept holds true for fractional shares that an investor owns in a corporation. In the event that a corporation splits its stock into 2 shares for the price of 1, investors' holdings would double, allowing them to own the entire share. Would you purchase Tesla shares prior to or following the split? Why? Tell us in the space provided for comments below. So, what impact do splits have on options? For example, what happens if a split is announced and you own a call option on a stock? In the event that you own an options contract on split stock, the split will not impact your contract. Instead, it will be adjusted. The new price and share count will be displayed, but the total value won't alter. We refer to this as the process of becoming entire. An option contract covering 100 shares at a $100 strike price. Each would now cover 200 shares at a $50 strike price in the 2-for-1 split example provided. It might be interesting to note that based on Dow Jones statistics, stocks in the S&P 500 increased by approximately 12% on average in the year after their stock splits between 2012 and 2021. According to those same numbers, the S&P 500's stock splitting rates have increased somewhat over the past several years to reach their highest points in almost 10 years. In the past, excessive stock splitting has been observed during market peaks, particularly during the 2000 peak for tech firms. Qualcomm, for instance, offered a 2-for-1 split of the stock in May 1999. In December 1999, the corporation announced a 4-for-1 stock split. QCOM's stock price surged by over 840% on the announcement of the initial split in 1999. On the first day of trading in 2000, shares reached an all-time high of $200, having previously traded for $21 in April 1999. Purchasing before the split might be a wise move because the price of Tesla stock could rise dramatically following the split. After the Tesla stock split in 2022 is over, a number of reasons could lead to further increases in share price. The first is a higher capacity for output. It is well knowledge that Tesla struggled to meet demand from customers for their cars as a result of production constraints. The company's amazing expansion has slowed down due to a shortage of manufacturing capacity. The construction of 2 brand new gigafactories may make that different. With these upgrades, Tesla will be able to produce 2 million cars annually instead of just 1 million as previously. Regrettably, the company and other automakers still have issues with the raw material and component supply chains, particularly with semiconductors. But once it's fixed, it's expected that the stock price of Tesla would rise significantly. Improved margins and effective production techniques are further factors. With the difficulty and cost of manufacturing cars, analysts said Tesla would never turn a profit. Only around 15% of the best automakers, such as Ford Motor Company, are able to maintain a gross profit margin. However, Tesla has developed techniques for producing electric vehicles that surpass those of the competition, and the superior quality of the final product justifies premium pricing. With a 32.9% gross margin, Tesla is far more flexible when it comes to operating expenses, such as developing new products and cutting-edge software breakthroughs like autonomous driving, which can help the company stay one step ahead of its rivals. Some claim that purchasing Tesla stock right before or right after the stock split could not be very beneficial. Investors find the stock appealing because of the company's strong fundamentals and its potential to be at the forefront of technological advancements that will make electric vehicles more widely available. All things considered, investors may find a stock split alluring since it gives them the opportunity to purchase formerly more costly stock for a significantly lower cost. However, a stock split should never be the reason for an investor to purchase a stock. Be careful to conduct thorough research, monitor stock charts to determine the ideal moment to purchase, and concentrate on businesses that have excellent fundamentals and are top price performers within their industry. Although a stock split may make news, Tesla's growth and profitability should entice investors to purchase the company's stock. Short-term price declines are possible, and it's impossible to predict when a bottom will appear. If you take a long-term view when making investments, the fundamentals of a firm have the best chance of determining your return on investment. A good business usually does well in the long run. To gradually purchase shares, you can also employ a dollar-cost averaging approach, which averages your costs to get a figure that is neither excessively high nor cheap. Make sure Tesla would make a solid investment in your portfolio before you purchase stock in the company. Should you want to proceed, research some of the top brokerage accounts that will enable you to handle your investments with the utmost efficiency. Check out our other videos on our channel for more information about Tesla stocks.